I'm Jordan Blum, Editorial Director at Hart Energy, and I'm here at the Executive Oil Conference in Midland with Dan Pickering, the founder and Chief Investment Officer of Pickering Energy Partners. Thank you for joining us. Really appreciate it.
Glad to be here, Jordan.
So just to get right into it, following up from our session on stage, just wanted to get your thoughts on your investment and acquisition strategies right now with PEP development and what y'all are looking to do in the Permian.
Sure. I mean, Jordan, it's a great time to invest in the oil and gas business from our perspective. The world needs more U.S. energy. We're focused out here in the Permian Basin and Texas in general. We've got $450 million worth of capital to deploy, and the Permian is opportunity rich. Hard to get deals done, a lot of volatility in the space, but really excited about continuing to invest in oil and gas.
Can you talk a little about the challenges with getting the right valuations and not wanting to overpay and where things stand?
Sure. I mean, in a market that has historically seen a lot of volatility, this year alone, $125 oil, $75 oil, $9 gas, $4 gas. So in a volatile market, you have to be smart about what you pay. And in a volatile market with relatively high prices, you've got folks who want a high value for their assets. And so finding that equilibrium has been tough, but again, the opportunity's there. So our view is patience, continue to work specific deals, and the market probably comes to more of an equilibrium in 23.
Yeah, so I don't know if you'll surprise us with a holiday deal, but are you feeling pretty good going into next year?
The pipeline of opportunities is good. We've bid on 20 things this year. We have another 10 that we're working right now. So probably nothing this year, but things will slow down with the holidays. But 23, again, I think buyers and sellers come together a bit better. So we're hopeful that we'll deploy a lot of capital in 23.
So this is a non-operated focus, but can you talk a little bit about if there's any preference between the Midland Basin, the Delaware, the pros and cons of both?
Sure. When we think about the Permian, there's no bad spot, if you will. It is an opportunity-rich basin still, even after 10 years of the shale boom. We tend to look a little bit more toward the Midland Basin just because there's more activity in general there. There's a more fragmented operator base. As a non-op player, we just want good partners. If they're good and smart in the Delaware, happy to deploy capital there, but we want good and smart operators in the Midland as well. So our opportunity split's probably 75% Midland, 25% Delaware.
Okay. And with everything going on geopolitically and pricing-wise and cycles, there's a lot of volatility, but at the same time, you feel like there's better visibility at the same time?
Yeah, I think things were crazy in 22, and we're starting to come, more toward understanding what the next 2, 3, 4 years look like. This energy security dynamic, I think, is real. And so when we think about visibility out for 2 or 3 years, trying to supply the world with safe, clean, affordable energy from the U.S., to us that says, we will find opportunities. And because things have been so crazy this year, as they settle down, it should be a good environment for transactions to happen.
Great. Well, thanks so much for joining us here at the Executive Oil Conference here in Midland and taking the time to chat. We really appreciate it.
It was a great conference. Thank you. Appreciate it very much, Jordan.